Results further is Starcomms CEO Maher Kubain. Maher, thanks so much for joining us this afternoon. And just for clarification, just come the end of October, we saw a number of subscribers exceed 2 million, outperforming all your growth projections, proving that growth still is there in the Nigerian market. What penetration levels are we still looking at in Nigeria?
Well, first of all, thank you for having me. It's good to see you again. We're very lucky that we are living and operating in one of the strongest economies in Africa. And in this turmoil of financial markets, we're also lucky to be in the higher growth telecom sector. Nigeria today enjoys a little under 30% in terms of penetration. So there's significant upward movement in terms of demand for telecommunication services with 140 million populace. So we see what we call the bloom period, and the real growth period is in the next 2 to 3 years, with roughly between 50 to 70 million more subscribers needing service in Nigeria. So that's tremendous potential for the country, and it also presents tremendous opportunity for Starcomms and the other telecommunications operator.
How has your market share shifted over the past 6 months? Because this should give us a rough indication of how aggressively you would be able to compete against the top 3 players within the Nigerian space.
Well, the incumbent GSM operators have had the first mover advantage for a 5-year period, plus a restriction on our license initially to participate in full national roaming mobile services. So if you really look at our growth, it began really in 2007, and between the 2007 to 2008, we grew almost by 1,000%. And just in this year alone, we've recently in October hit the 2 million subscribers mark, and we're likely to end the year with closer to 2.3 million subscriber mark. And within the total number of operators, to put things into perspective, you have 4 GSM operators and about 5, almost 6 CDMA operators. So amongst the total market share, overall we have a little under 3%, but within the CDMA tier segment, we control a little over 37% market share. So just to put things in context, we are looking to reach between 7 to 10% market share in the next 24 months, overall, not just in our tier segment.
What exactly is your competitive edge?
Well, we have 3 competitive advantages. We are a triple play provider, which means we provide fixed wireless services, mobile national roaming services, and data broadband services. For example, our broadband active subscriber base grew a little over 140% in the 3 quarters of this year alone, which is tremendous growth over the previous period. So our advantage is not only in the triple play, but the second piece that we provide that's unique to Starcomms is we are known today as one of the best network quality provided in Nigeria. And then the third element is we stand for value for money. We're not cheaper. We're not more expensive. We provide the best value for the quality of service that we do provide, and that's really the niche on the unique selling advantage of the company is triple play, value for money, and today we have doubled our coverage. We will be operating in 31 cities, 20 states, and 141 towns before the end of this year.
Just looking at that quality cost issue there, I mean, looking at competitive strategies, we've seen in Kenya, the telecoms players there ramp up in terms of price-cutting mechanisms coming to the fore in order to achieve more of a competitive edge. How effective is a rate cutting as a competitive tool in your books?
Well, that's a good question. We don't typically look at for tariffs as a main competitive advantage because that's something everybody can duplicate and follow. We look for value for money, but to answer the question direct, the interconnect costs in Nigeria remain a little higher than the average countries in the world for various reasons. So that's one item. And the second issue is the challenging environment of infrastructure limitations between power and fiber and such also does not allow allow the price reductions to levels like you see in Kenya or in India, where countries and companies are operating at below $5 ARPUs very profitably. And this is something we have led in the country as the CDMA operator of choice in the country. We have led the price reduction prices, but we have managed to also maintain profitability as a focus. So I do not see price dropping to be a reality anytime soon due to the challenges of interconnect costs and infrastructure limitations in Nigeria.
Looking at what's driving profitability for you right now, I mean, you mentioned earlier that you're a triple play service provider, which includes mobile, fixed, voice, and data products. That's quite a diverse offering. What's driving your growth at the moment?
Well, the beauty behind the CDMA technological advances is from the same CapEx investment into the infrastructure, we're able to offer those multiple products and services. For example, the broadband penetration, we've talked a little bit about the mobile penetration being a little under 30%. If you look at the ICT, which is information, communication, and telecommunication services in the country, it's less than 2% penetration. So there's a tremendous growth cycle for internet and broadband services, and we've ridden that wave of growth. 2 years ago, we led the deployment of the broadband services. We were the first in West Africa to deploy the EVD or Rev 0. We were the first to deploy Rev A in Nigeria. And so that growth cycle helps protect the erosion of margins that is typically experienced by pure voice operators. The second element is the fixed wireless services, which is also in high demand. That also helps protect the eroding ARPUs and helps also protect the margins and creates more stickiness to the brand versus a single operator with only voice services.
Just looking at also competitive strategies going forward, are you looking at strategic partnerships, for example, with the financial sector, to seeing a tie-up on that way so that you can leverage more of what you've already got out there in the market?
Well, smart partnerships is something we are looking at, but there's 3 company-wide initiatives that we have a moral obligation to our share owners and to the public at large and to the world to prepare ourselves not only to meet the challenges of the current financial turmoil, but prepare for the exit of this cycle into the next economic upturn. And to that end, we're going to focus on expanding free cash flow in 2009. We are going to focus on technology as a differentiated advantage to our offerings, and we're going to focus on services to deepen our long-lasting relationships with our customers. These 3 company-wide initiatives will allow us not only to protect the current investment and leverage it, and also look at how we come out of this turmoil ready for the next upturn and prepare Starcomms for the 21st century. And that's what we do best, is we weather storms by being financially frugal. We have still remaining some significant cash in our books from the private placement that you've alluded to earlier of July of this year when we listed public. So we are doing quite well in managing our resources, and the name of the game in 2009 is the 3 initiatives I've mentioned, and preparing ourselves not to meet the challenges of the turmoil, but to be prepared for the exit and the next economic upcycle. And that's something that we need to keep our eyes on in the long horizon, not just look for the short-term issues, which we are focusing on.
Maher, Byron Kennedy here. Just in conclusion, how concerned are you about competition or increased competition from South African companies in recent times? Vodacom announcing an acquisition that's going to give it a stronghold into the business sector. Also, Telkom, along with their results yesterday, saying that they're going to be looking at buying up data center businesses into the rest of Africa.
Well, that's a good question. Vodacom and Telkom SA have announced, I mean, if you look at Vodacom, I won't allude to it, I'll come back to it in a minute, but if you look at Telkom's acquisition of MWeb, is a clear direction that they're following their broadband data strategy, which is where they come from in South Africa. The key differentiator in Nigeria is having strong operational experience, which Starcomms has been doing, maintaining the growth momentum, which we have to hit the economies of scale, and unless you reach over the 2 million subscriber mark in the CDMA sector, it's going to be difficult to leverage economies of scale. And the third thing is the brand equity, which is something very powerful for Starcomms. We continue today to offer handsets at 27% higher prices, and our airtime tariffs are 23% higher than the other CDMA operators, and they continue to try to buy subscribers, but we continue to exceed our activations target, even though they're offering a lot less prices for handsets and airtime. So that's the power of the brand, the power of the quality of the company, and the ability for us to move and be agile to not only meet the financial standards of today, but prepare for the next upcycle of tomorrow.